All right, everybody. Today, I'm going to talk about a mistake that I see a lot in business returns, and I want to talk about it. And this is even before you prepare the return. But before I go any further and talk about retained earnings and how it needs to roll, there are 4 simple things I want you to do if you're enjoying my content. Number 1, like the video. 2, subscribe to the channel. 3rd, hit the bell so you get alerted when new content comes out. And then lastly, share it with your friends. Everyone needs to hear this stuff, especially if you know people that have small businesses, side hustles, stuff like that. Make sure that they read this. And now here's the thing. On a Schedule C, which is what you would report if you are a single member LLC and you elect to be taxed as a sole proprietor, or you're just a sole proprietor to begin with. You'll report that on your 1040, and you don't have to put your balance sheet. But if you have a partnership, and especially a larger partnership, or you have a corporation, S or C, you have to show your retained earnings. And it is very important that this is correct in your books. Before you even prepare the return, this has to be checked. This has to be right. And if you're bad with your retained earnings, this will create additional fees that the CPA is going to have to figure out and how to track it down. It's going to create additional headaches, and we don't want that. So what are retained earnings? Retained earnings are basically, I like to think of them as, a stored profit. A stored up profit or loss, like a running tally. And so let's walk through an example here. Let me erase the board real quick, and then we're going to run through it, and I'm going to show you what I need to look for. Okay. So let's say, first year in business. You have a $10,000 loss. The second year in business, you have a $5,000 loss. Third year, $15,000 in profit. And so these are, when you do your books, these are what you have. So here's how we figure out what is retained earnings. So retained earnings we simply accumulate these amounts. And so it's like I said, it's like, think of it as a kind of a scorekeeper of your past income and expenses, and it rolls every year and accumulates. So we had after year 1. So I'm just going to write, if I can, these markers work. So these are the years, and this is going to be at the end of year 1. So at the end of year 1, you have a retained earnings, a deficit technically of $10,000, right? 10,000. After the second year, I lost another 5,000. So when you roll it, now you're gonna have 15,000. Third year. So do you see how I got this? I'm summing them up. So I had a $10,000 loss, and then after the second year, I had a $5,000 loss. So, and when I close the books out at the end of the year, that 5,000 will get added to the retained earnings, and I'll have 15,000 as a loss. Now, and that's a retained deficit, if you want to call it that. Third year, I make $15,000 in profit. When I close that out, I'm now back to zero. It's great. The fourth year, I make a $30,000 profit. I have a $30,000 retained earnings balance at that point. So what ends up happening is the returns will not roll. And what I mean by that is, this is what I expect in your tax returns, especially if you have a balance sheet and you're using QuickBooks. This is what needs to have happened. Again, you have these incomes, these profits and losses, and they need to constantly roll. what ends up happening though is some clients, for some reason or another, will have these off. And the biggest culprit that I see as to like why they don't match, because you're like, well, they should match. You're just adding up the profits. Well, you are, but your CPA, and they need to tell you this, it's called adjusting journal entries. Sorry, this marker's kind of going bad. Adjusting journal entries. So what those are, there are adjustments. I don't want to get too technical with the accounting jargon. There are adjustments that your accountant will make to your books after they prepare the return. So for example, you at the end of the year may have your profit, but you haven't figured out, maybe you bought some equipment and you haven't depreciated it yet because you wanted your accountant to do it and calculate it. And that's okay. But your accountant will tell you, you need to make this entry. Let's say $1,000. And the other side of that is accumulated depreciation. I don't want to talk about, but I don't want to get too caught up in the accounting jargon. The problem is, if you as a client do not book this, the accountant has, you end up getting as a mismatch. So let's go for the example. Let's say you as a client and the CPA. So now let's say you give the accountant a $10,000 profit book statement. The CPA also has that. The CPA though comes in here and adjusts that. So now they're at $9,000. They adjust it. You haven't adjusted it yet. But this is the problem, is you're showing this, and the CPA is going to come and say, hey, you need to do this to make your books match. What clients don't do, they don't make that entry. And so next year you have, this is the retained earnings. That since the CPA is preparing the return, this is the retained earnings that will be on that return. Whereas your books will show 10,000. And so what ends up happening is the CPA has to go through and figure out, okay, was it something like this? This is probably 90% of what it is the accountant gave you journal entries and you didn't book them. You didn't have your bookkeeper book them. This is a lion's share, but could you have booked an entry wrong? In other words, the CPA may start at that point and saying, okay, well, did you book an entry wrong? And if you did that, they're racking up time on your account, charging you for that, when a quick check before you give your paperwork to the accountant would have saved you this time. So what I recommend is, making sure that if a CPA gives you entries, if they tell you, hey client, book this entry so that we match. If you have questions, ask about it. Definitely ask them while they're doing it, but book that entry so that you guys have the same records, because then next year you guys will match and this shouldn't be an issue. And again, it'll save you money. So hopefully you got value out of this video. If you have any questions, feel free to drop them in the comments below, and have a fantastic day.